Most Forex swing traders fail not because their strategy is bad, but because they've never actually tested out properly. So in today's video, I'm breaking down my extremely simple strategy, literally step by step on how I use it, how it works, and we'll test that out together to see if it actually works based on data. And in case you guys are new here, I'm mainly a Forex trader. I've been swing trading for over 3 years now, and over time I've refined an extremely simple strategy in the 4-hour time frame only that, to be honest, it works pretty good. And when I say simple, I mean stupid simple. And to be honest, I realized I've never done a breakdown of my actual system, so I said, you know what, let's do a video explaining exactly how I trade. So in this video, I'm gonna finally walk you through how it actually works step by step. I'm not gonna just show you the strategy and call it a day. I'm gonna dive into how I test it. I'm gonna show you exactly how I backtest, how I gather data, and also how I evaluate my metrics to see if it actually works or not. Because of course, as I've always said it multiple times, this is the most important part, and actually, funny enough, most traders avoid it. And for this video, I'm going to use a tool I've been using for quite some time already, which is called Forex Tester Online, which is basically a backtesting software I've been using recently to test not only my swing trading strategy, but also my futures trading strategy, and at the same time, evaluate my data analytics. Because you guys know, I'm data driven, so I'm really passionate about evaluating my metrics, gathering data, and backtesting a lot. Okay, so let's get started real quick. This strategy basically works based on 3 simple rules: liquidity sweep, break of structure, and fair value gap. I'm not going to go over each one of these concepts in this video. I suggest that if you guys don't know what each concept means, just watch a couple of videos. It's pretty simple. And after understanding what those concepts mean, then you can come back in this video and understand the strategy. So in simple words, I only trade one single time frame. I trade the 4-hour time frame. So let me actually write that down real quick. So I only trade the 4-hour time frame. And sometimes I check the daily, sometimes I check the 1 hour, but that doesn't interfere in my overall decision at the end of taking a trade. So let's say, for example, if the daily time frame is telling me that it's more likely for us to be selling than buying, but there's a buying opportunity in the 4-hour time frame, I just execute my position. I ignore the daily time frame because my main execution and my data, it's only focused in the 4-hour time frame. So now, after understanding this, we can get started, and I'm going to cover 2 different setups: a short position and a long position. So let's say, for example, that we have a bearish market right now. So price is just trending lower, right? Making lower highs and lower lows consistently. And then what do we expect? So in this case, if we see a bearish position, a bearish trend, we expect that price is going to respect the most recent high and then just keep going lower, creating new lower lows, right? But in reality, what we're looking for in this strategy is we have a bearish structure to the downside, and we wait for price to manipulate, or in other words, take liquidity from this previous high, right? And then after taking liquidity, we wait for a break of structure to the downside with a lot of momentum, which, by the way, the break of structure must have a body closure, not a wick. I don't consider break of structures with wicks. I consider break of structures only when they have body closures, and basically breaking structure and leaving in the entire move a fair value gap. That's literally the 3 rules. We wait for a manipulation, or in other words, a sweep, a break of structure, and a fair value gap. When we have those 3 rules in place, we just wait for price to retrace to our entry, which, by the way, we only enter in buy or sell limits. So we set pending orders on our NT5 when price starts retracing to our expected entry. So let me show you. So we have a bearish structure to the downside, right? Then price takes liquidity, breaks structure, leaves a fair value gap in here, right? We just wait for price to start retracing to our entry, and that's where we set and place our Fibonacci level, entering and or targeting a 0.5 level as our entry point. So we dragged our Fibonacci from the highest point in this case to the lowest point in this case. If you guys want this specific settings, just reach out to me on Instagram. I'll send it to you real quick. Super simple to kind of like set it up. And we just wait in this case for price to reach our entry, or 0.75, tag this in, and then expect, of course, a take profit, so price to move to our expected direction. When price reaches this point right there, which is the 0.5 fib level, it's a 1-to-1 risk reward. When price reaches a 1-to-1 risk reward, we move stops to break even and then just let price do its thing, or come back and stop this out of break even, or reach our final take profit. That's it. We don't do anything else. We don't go into lower time frames and start kind of like trailing our stop loss or anything. No, it's super mechanical and super simple. So make sure to keep things super simple. And then we have the other scenario that it works exactly the same, but just in the opposite direction. We have a bullish trend, right? We just wait for price to take liquidity, right? Break of structure, and then in the break of structure, leave a fair value gap. I'm going to show you some examples in a second, but we basically just wait for retracement. When price starts retracing, that's when we take our Fibonacci tool, we drag it from, in this case, the lowest point to the highest point because we're in a bullish position, and we just wait for price to retrace until it reaches our 75 pip level and tag this in. So the position, the pending order, the buy limit in this case, gets tagged, and we're currently in a long position in the markets. In simple words, in this case, we just take the long position, right? We place it in there, and we just target the take profit. It's basically a fixed 1, 2, 3 risk reward trade. And I know it sounds fucking simple, but I told you guys, it's stupid simple, and we don't need to overcomplicate things. So in simple words, we just wait for thin, bearish structure, liquidity sweep, break of structure, fair value gap, boom. And in bullish position, we just wait for a liquidity sweep, break of structure, fair value gap, boom. That's it. Okay, so now that I explained how it works, which as you guys might be saying right now, yo, this is so fucking simple. Yeah, it is, and you're gonna see it in a second. We're gonna test a couple of trades, a couple of setups, so you guys can kind of understand how it looks, because there's one thing when you just draw some lines, and the other thing is when we actually see real candles in the market. So let me actually create a project. Like I said, I'm going to be using Forex Tester, which is the backtesting software I've been using for some time already. So let's dive into that real quick. So in this case, I'm going to create a quick session, a random pair, let's say for example, GBP, and we're going to test that out. Okay, so now that we have this opened, we can just start moving forward. If you guys, for example, not used to kind of like using a backtesting software, it works pretty simple. You just go back in time. In this case, I'm in January 1st, 2025. And the main purpose of backtesting is just going back in time and testing by moving price forward, so you guys kind of like see if the strategy works based on previous data. So in this case, like I said, I'm starting on January 1st, 2025, and we're gonna see a couple of setups, and I'm gonna just guide you through it and explain the reasoning behind each trade, which, by the way, this is not prepared. I might lose the next couple of trades, but you guys know that I'm completely transparent, so I'm just gonna show you exactly how they work, and hopefully we can have a couple of wins. Okay, so we have the first trade, pretty simple and straightforward. So what do we have? So in this case, we have a liquidity sweep in this area, right? Price swept liquidity. Then we broke structure with a body close. You guys can see that there was body closure, and we have multiple fair value gaps. Fair value gap in here, another fair value gap in here. So this makes this trade completely valid. So we grab our Fibonacci level, right? Now we can see that price is reversing to our expected entry, and we placed our pending order in this case. We can just do it in here in Forex Tester, pretty simple. And then we just place our order. As you guys can see, it's a limit order. We place order, and then we just wait to see if price actually reaches our entry or not. So let's move price forward. Boom. So this was what I call a missed trade. Okay, so next opportunity. Again, same thing. We're bearish in this case. We have what? A liquidity sweep. So we swept this highs. Then we have what? A break of structure. And we have a fair value gap in the entire move, right? So this is completely valid. So what do? We just drag our Fibonacci level. We place our pending order in the 0.75 FIB, targeting a 1, 2, 3 risk reward. And then I just place my pending order and wait to see if price actually reaches my entry or not. We'll see. It's taking some time in there. Boom. So we got tagged, and it was a fast stop loss. So that's a completely valid stop loss. And this next couple of trades were taken while back testing, in this case NSET DJPY. So they're all valid setups following my 3 specific rules: liquidity sweep, break of structure, and fair value gap. So all the trades are valid, and I wanted to kind of like record some backtesting sessions so you guys can kind of like understand a little bit more about the setup, how it works, and how I basically execute in real market conditions. Okay, so now that you guys watched the videos, let's actually jump into my favorite part and the most important part about it, which is evaluating our metrics and understanding if the strategy works or not. Because you guys, of course, are gonna go and backtest this same strategy yourself. And I want to provide the most valuable information so you guys can actually go back after backtesting your strategy and evaluating yourself if you have a profitable edge or not. So let's just dive into some numbers. In this case, I'm going to just check and set the JPY. These were the sessions I tested yesterday. So and set the JPY, and set the CAD and Euro USD. You kind of like saw a couple of trades I took on these 3 sessions. So let me just open here. And what we're going to do is we're going to just dive into the analytics real quick. So first, we can see that it says right away that the trading style is likely swing. And something that caught my eye right away, it was this one. It says you need at least 30 trades for more precise recommendations. Keep testing. The more data we have, the smarter your analytics become. And this is something I really appreciate from this backtesting software, because it right away tells you, yo, you have a small sample size. You should keep testing more. Why? Because if we just go down, we can see that we only have 13 trades in this sample size, which is extremely slow for us to make assumptions, for us to just say, oh yeah, I have a profitable strategy, because it's super funny that there's a lot of traders that they maybe backtest January 2025, for example. They take 2 winning trades in a row and they immediately assume, yo, I have a profitable system. I know what I'm doing. They buy some profit challenges and they blow everything right away because they don't even know what they're doing. They don't have a profitable system that has been tested thoroughly. So right away, we need more sample sizes. But of course, you guys know that I've tested multiple times. I have thousands and thousands of trades backtested. So I'm not going to just redo everything again. You guys can see all my videos from kind of like the previous videos. I've shown my sample size and my backtesting data. So in this case, I just decided to test a couple of pairs to explain what I like to see and what I look into the data analytics to identify and understand if it works and if it's profitable or not. If we see, for example, it says right away based on AI, based on sample sizes, some points to improve. And while reading it, I can immediately see that it says try managing trades to achieve a 1-to-2 risk to reward, which is pretty interesting because a lot of people always tells me, yo, why don't you test your strategy just hitting a 1-to-2 risk reward? It might actually be extremely profitable for you. And based on this sample size and this insights, it's actually telling me to do so. And it's actually telling me to keep testing and maybe start managing this better. So all of these insights, which are points to improve, right? And also strengths, are some things that we should be reading and paying attention so that we can refine. We shouldn't be refining with just 13 trades as this example. We should actually refine after multiple trades, which I recommend a minimum of 200 trades to start making some refinements or adjustments to your strategy. Then if we keep going down, we have this that I really like and I believe it's extremely game changer in this specific software, which by the way, not other softwares have it. This is the first time I see it in one of these backtesting softwares. And it's one of my favorite things that I'm kind of like getting to know a little bit better, which is the exit optimizer. Because in here, you can literally check what's better based on numbers, based on your system. Like I said, the sample size is small, so we're not gonna see a huge difference. But of course, it's really interesting to just check it out. In this case, for example, if we decrease and adjust this bar, so in this case, we're going to just max holding duration. Let's say that I don't know, I don't like to hold trades for too long. Let's actually decrease this to, for example, 1 day and 9 hours. We can see that by decreasing our max holding duration, so basically in other words, making our trades play out faster, so not holding them for too long, we can see that right away our net profit or our R return decreases. So it's actually based on data, much better for us to just keep the duration longer. We, for example, increase it a little bit. We can see that it also decreases a bit. So based on this sample size, the perfect timing for us to hold trades, it's around 3 days and 2 hours. Then if we, for example, see our stop loss, let's say, for example, that we want to decrease the stop loss, we can see that by decreasing the sizing of the stop loss, so basically, in other words, making the stop loss tighter, our net profit decreases substantially, right? While on the other hand, let's say, for example, if we want to increase it, we can see that it also decreases, but the change is not that drastic compared to if we make it smaller. And by this evaluation, we can also kind of like go back in here and say, yo, it makes a lot of sense, because if it's telling us that we should actually test aiming for a 1 to 2 risk to reward, well, that makes a lot of sense, because if we make our stop loss bigger, we can aim for a 1 to 2 risk to reward instead of a 1 to 3 risk to reward, right? So in this case, it makes a lot of sense. And also our win rate will be really solid. But in this case, for example, let's actually evaluate our win rate. Based on our sample size, which again, I'm gonna repeat it multiple times in this video, the sample size is small, we have a win rate of 61%, which is fucking crazy with a 1 to 3 risk reward. I know that if I keep taking trades, this most likely is gonna decrease, because my win rate is between 35 to 36%. But of course, the sample size in this case was really profitable. And of course, that's why we have a high win rate. Then if we go lower, we can see, for example, the performance analysis. And in this case, I really like this part, which you guys should be paying attention a lot, which is how many trades, or kind of like the balance between long positions and short positions. Because our main point as traders, and in this specific strategy, which is extremely mechanical, is for us to be replicating the same edge over and over again without any biases. So it doesn't matter if you prefer taking shorts, or it doesn't matter if you prefer taking longs, you should be executing every single position no matter what you like or what you don't like. And in this case, we can see that we're consistently executing everything completely balanced. It's basically almost 50-50. So 50% of the shorts and 50% of the longs. So there's no kind of like biases or just numbers like, oh, 93% were longs, right? Of course, it really depends on the sample size and kind of like the trending of pair. But in this case, we really want to look for a 50-50 kind of like balance. Then we have something that, in my opinion, like the part that is most important to me, which is the risk and performance metrics. And in here, we can see everything that will literally tell us, yo, I have a profitable system or I don't have a profitable system. So in this case, we have a small sample size. So first negative thing, we need to increase that up. Then we have, for example, in this case, the maximum consecutive profit trades, so the maximum winning trades. And then we have this part, which is, in my opinion, the most important part, which is the maximum consecutive losing trades, which means how many losing trades we had in a row without actually having a winning trade or a break-even. In this case, we had 3 losing trades in a row. And if we increase our sample size, most likely this is going to also increase. And understanding this number and having a super dip in our brain will help us eventually in the future, when we experience a losing streak, go back into our data and see, yo, my maximum losing streak was 3. Okay, it's all good. Or for example, if in this number says 15, well, be prepared for a big losing streak. And if you have that big losing streak, you must go back in your data and see, yo, maybe I'm having a 10 losing streak right now. Well, my data says that my maximum losing streak based on 2,000 trades collected was 20 trades in a row. And even with that maximum losing streak of 20 trades in a row, I was able to make profit long term. So yes, guys, that's basically the strategy I've been using for a lot of time already, and literally the same stupid strategy that made me consistent in this business. So I'm really excited to share it with you guys. I hope it works. I hope it was a very helpful and insightful video. And also, I wanted to say that I'm really excited to be collaborating with Forex Tester Online in this video. You guys know that I only recommend things I personally use and trust. And in this case, like I said at the beginning, I've been using this backtesting software for some time, and I know it's going to help you guys a lot. Also, you know that I'm super data driven. I love backtesting. I love gathering data. I love journaling my trades. And to be honest, like I've said it thousands of times, I believe that without doing this proper analysis and gathering data, it's literally impossible to become profitable and successful in this business. So my biggest advice at the end of this video is, if you're serious about trading and you actually want to grow as a trader, this type of tool, this kind of tool, is something that you should be using every single day, especially you're just starting out in this journey. So yeah, man, I'm just super fucking hyped to be collaborating with Forex Tester Online, and I just wanted to share it with you guys. And yeah, to close this video, if you guys want to test your own strategy or maybe test the strategy I just shared with you guys, the link of Forex Tester Online is in the description of this video. You guys can check them out. I highly recommend it to you guys. So let's just get started. Stop overcomplicating things. Stop procrastinating when it really matters and start actually building your edge based on data and based on metrics. That's it. And also important to mention, if you guys want me to break down more setups, show you more trades, maybe record more backtesting sessions again. I used to post some backtesting sessions, like live backtesting sessions. I stopped doing it. So if you want me to post more live backtesting sessions, just let me know in the comments down below. And again, thank you very much for watching. I hope you guys like it. If you like it, just like, subscribe. That's the best way you can support this channel. And I'll see you guys in the next video. Take care.